My name is Andrew Stotz, and I want to welcome you to this Valuation Masterclass Bootcamp presentation. Really excited. We've got a great presentation coming up tonight, and I want to hear your feedback. I want to hear questions that you may have about the company. The company's Volvo, and I think it's Volvo trucks, so it's even more interesting to me. We're going to be looking actually at the trucking industry this evening, and so you'll see a couple more coming up. But so tonight I want to introduce, and let me just bring up one second. So Sneha, one of our students from Valuation Masterclass Bootcamp, how are you feeling? Are you ready to go? Oh, you got to unmute. Let me unmute you. Hold on 1 second. Hold on. All right, how do you feel?
Okay, I'm feeling nervous, excited about the whole presentation.
And that's understandable. In fact, we were just talking before you went on that you've spent, as you've said, about maybe 100 to 110 hours working in Valuation Masterclass Bootcamp, and I know that's a huge commitment. And so I'm excited to see what you have, and I think that the listeners out there and the viewers out there will appreciate it. You do have some fans coming on now to give you, Yash is giving you a little cheer, and also Charvi says good luck, and yeah, Priyanshu says best of luck. So welcome everybody, and I just want to welcome everybody who's on the show. You should start asking questions as soon as you see questions that come up. I'm going to exit this, and first thing I'm going to do, though, is I'm going to bring up your presentation, and then I'm going to basically get myself out of here and let you go. So you ready to rock?
Yes, I am.
Okay, I'm going to pull myself out and turn it over to you. Here you go.
Okay, so I'll begin with my presentation on the Volvo Group, which has expansion plans for upcoming EV projects. I initiate coverage on Volvo with a buy recommendation based on a target price of SEK 358, implying an upside of 32%. I derive this target price from DCF based valuation using a WACC of 10.6% and a terminal growth rate of 1%. Highlights of this presentation are investments would drive future revenue growth, capitalizing on cash flow for enhancing EV production capacity, profitability pressures might decline the net profit by 5%. Moving forward with the background of the Volvo Group, Volvo Group is a Swedish corporation that specializes in commercial vehicles, construction equipments, and related services. The company derives significant revenue from Europe, North America, and Asia, and it has the main sources of revenue are trucks, buses, construction equipment sales, and services. Moving forward to the stories of the Volvo Group, the very first is investments would drive future revenue growth. Volvo has significantly invested 9 billion to modernize its manufacturing facilities in Sweden and the US, aiming for a 20% boost in operational efficiency by 2025. The company projected annual sales growth of 25%. Volvo can achieve this projection because of the rising global demand for e-trucks and construction equipment. Additionally, Volvo announced an investment of 5 billion to establish new sales and service networks in strategically important markets like North America and Asia, anticipating a 25% sales growth in these regions by 2026. The future looks promising as these investments are likely to yield significant returns, ensuring that Volvo remains at the forefront of the transportation innovation. Capitalizing on cash flow for enhancing EV production capacity. In 2024, the company reported a free cash flow of 9 billion, which was a significant improvement from 6 billion in 2023. This increase is attributed to stringent cost controls and improved operational efficiencies. The management plans to allocate 60% of this free cash flow towards expanding its e-vehicle production capacity and enhancing its supply chain resilience. Additionally, the company intends to reinvest 30% into research and development to foster innovation in autonomous driving technologies. I conclude that this would enhance the company's operational efficiencies by 20%. Profitability pressures might decline the net profit by 5%. While Volvo has historically maintained robust profit margin and also reported a 9% operating margin last fiscal year, this is projected to decline to 7% over the next 2 years. This decrease is driven by the escalating e-vehicle cost and competition. With anticipated 5% annual revenue growth from electric trucks and buses, margins under pressure could compromise profitability. I expect that without cost control, reduced margin and increased costs may lead to a 5% decrease in the net profit in the coming years. Moving forward with the industry page of the Volvo Group for the Volvo Group. Navigating challenges and seizing opportunities in complex future of the trucking industry. EVs and hybrid trucks propel industry's next big wave. The truck market is valued at over 7 trillion in 2022 and is expected to grow at a CAGR of 9% by 2032. NAFTA and Western Europe remain the most profitable markets, contributing to 65% of the overall profit pools. However, those markets are saturated, so it is expected that emerging markets like South America, India, and APAC will experience more profitability, especially APAC being dominated by China. China's production of trucks is projected to reach 1.5 million vehicles by 2029. China is a promising market for the new era of EV. The growth of EV is driven by growing market regulations to improve EV adoption, e commerce, and increase in consumption. According to IMRC Group, the EV truck market share reached $2 billion in 2023 and is expected to reach $15 billion by 2032, exhibiting a growth of 2030 CAGR. I conclude that China would dominate the market due to the exemption by government on buy of tax, the focus of governing authorities on reducing the oil imports, and the current technological shifts of infrastructure. Economical distributions might hinder the market growth. Even though the market contains key opportunities, it is hard to attain as there are technological shifts from fuel vehicles to EV, which take time. And by rising Russia-Ukraine war, the global benchmark Brent crude oil price is forecasted to jump from $70 per barrel to $69 per barrel in second quarter of 2024. According to ATA, 72% of the trucking companies were experiencing challenges in obtaining parts due to supply chain disruptions. This is the quarterly analysis of the Volvo Group. In the fourth quarter of 2023, Volvo experienced a slight revenue decrease by 0.1% YOY. The company saw a 4% increase in gross profit margin, followed with a 9% increase in net profit margin and a decrease in EBIT margin of 2%. This is the consensus estimates, which includes recommendation from 23 analysts, which includes 5 strong buys, 7 buys, 9 holds, and 2 sells. The mean target price is SEK 312.8, indicating a potential 15% increase. The revenue growth is expected to decline by 7% in 2024, followed with an increase of 5% and 6% in 2025 and 2026, respectively. Apart from this, all margins remain constant. This is the revenue structure page of the Volvo Group. In 2023, the company total revenue reached approximately 34 billion and which was segmented into three primary categories: trucks, construction equipments, and buses. Among these, the truck segment is the most significant contributor, accounting to approximately 70% of the total revenue. Key regions contributing to the Volvo Group's revenue are Europe, North America, and Asia. Moving forward with the FVMR of the company shows a strong performance relative to its peers. Return on assets and return on equity showed a consistent upward trend. Momentum indicators are also positive with the strong revenue and EPS growth. Risk metrics highlight concern primarily due to the increasing debt levels of the company. Moving forward with the WCB of the company consistently ranked in the top 20% among 1,430 large companies globally and similarly marked its trend in the profitability area as well. Growth has shown a strong upward trend, moving from 7th in the place in 2022 in 2020 to fourth position in the past 12 months. Asset efficiency has ranked 6th in all these years. However, strong expense control has consistently offset efficiency. Revenue growth has also improved dramatically from ninth position in 2020 to fourth position in the past 12 months. This is the profit loss statement with actual and forecasted estimates. The revenue of the company is likely to rise at a very steady rate. The same goes for the EBIT. The cash and short-term investments are likely to decline in 2024 but then show an upward trend. The goodwill of the company would show an upward trend in the coming years. This is the actual and forecasted estimates of total liability and total equity of the company. The operating cash flow shows an upward trend. Investing cash flow shows that there would be a consistent investments made by the company. The current ratio would be increasing, which indicates good liquidity of the company. These are other ratios of the company where we all can see that revenue and profit margins of the company are likely to decrease in 2024 and then show an upward trend. This is the free cash flow data of the company, which has pretty steady estimates. Moving forward with the relative valuation, on the forward 2025 PB multiple, Volvo looks attractive compared to the benchmarks. I forecast its return on equity to be around 30% in 2025, which is significantly higher than the sector average in Asia and global average. This results in Volvo trading at a significant premium. Volvo's PE ratio for 2025 is 17.9 for the world. I expect its EPS to be positive in 2025 with a projected increase for 6% for the Volvo and 11% for the Sweden respectively. These are the assumptions of my presentation. I assumed a risk free rate of 3% and a market equity premium for the US market of 8%. Volvo has been a high beta stock, so I assumed a beta of 1.3. I forecast the capital structure with around 21% debt to total capital. This results in a WACC and a discount rate of 10.6%. I use the terminal growth rate of 1% to value Volvo. In the base case scenario, I anticipated sales growth of 5% until 2028, leading to a value of 358 per share based on the FCFF methodology. In our sensitivity analysis, the optimistic case assumes a sales growth of 6%, resulting in a target price of SEK 361. And in the pessimistic case, the sales growth is assumed to be 5%, yielding a value of SEK 354 per share. This is a sensitivity analysis of the Volvo Group. Moving forward with the risk associated with the Volvo. Geopolitical instability creating market volatility. Geopolitical tensions, particularly in Europe and Asia, pose a risk to the Volvo's group operational stability. Volatility in these markets can lead to fluctuating cost and operational uncertainties, directly influencing planning and profitability of the Volvo Group. Technological evolution requires continuous investments. As the automotive industry shifts towards electrification and autonomous driving technologies, the need for substantial investments becomes apparent. Failure to keep pace, failure to keep pace with technological advancements may render the company less competitive against rivals who are fully capitalizing on innovations in the sector. Environmental regulations strain compliance cost. The European stringent emission regulation set to tighten in 2025 could significantly impact group's operational cost. The company projected roughly 1 billion to increase in compliance cost in 2022, which directly impacts profitability if not managed effectively. Supply chain disruptions threatening production. In 2022, the global automotive industry suffered a semiconductor shortage, leading to 14% decline in production output in major markets like Europe, North America, and further disturbances could lead to increased production costs and delayed vehicle deliveries, jeopardizing the revenue streams. This was my presentation.
Okay, leave it up there because I want to go up through it. And we've got some questions that have come in. Why don't you go to the first page? Can you just press home and go up? All right.
Yeah.
Okay. One of my first question is I I heard 25% growth in revenue. Was that for the EV segment, or what was that they were saying? What in other words, what is happening with EV trucks? Is that massive? Is it small? Is it growing fast? What is the condition of that? What will it be as a percent of total revenue?
As a percent of total revenue, it could be around 25 to 26% of the company's total revenue, since it has massive expansion plans, as being already stated in the presentation.
Okay. And are EVs more or less profitable than existing trucks?
EVs will right now be not so much profitable as the existing trucks, because in order to recur the complete cost, it would be a less profitable. But in the future run, with the advanced technologies that the company is processing to get, it will become more profitable.
Okay, let's look at some of the questions that we've got here. And the first one comes from Oman. Is there anything that could lead you to change your recommendation from a buy to a sell? Like, what would be the worst case situation that you could imagine happening that would turn you negative?
Okay. So the worst case scenario where I would change my recommendation from buy to sell would be the time when the company is facing major supply chain disruptions, as it is also facing now, but it has been able to cope up with the operational efficiencies. But in case if it is facing more supply chain uh, problems, then it might be a downturn for the company.
Okay. And another question from Priyan Shu says, what's most competitive and first factor for involvement you see, which leads you to buy recommendation? Like, what is its strength? Like, I'm looking at very good returns and pretty steady growth. What is it that you like about it most?
The most that I like about is the constant investments being made. Apart from that, they're constantly investing in R&D expenditures, which entails that they are improving. They are focused on improving. That is something that I like about this company a lot.
And can you, let me just see if that'll help us a little bit. Can you go to the P&L, your P&L forecast?
Yeah.
Okay, so you got a question here from Charvi, which is asking about why has the company experienced a major increment in EBIT margin in 2023? What is it? Because if we
Okay.
look at EBIT right there, we can see a huge jump, right?
Yes.
Tell us
Okay.
about that.
So, so this is because of primarily two reasons. The first was that they had higher volume sold in 2023, and apart from that, there was an increased price realization of the company per car.
Okay. And another question coming in, Anima says, what were the measures taken that Volvo dramatically increased its ranking in the revenue growth in WCB? So we just looked at EBIT, but what is it about revenue growth that's been so strong recently?
Okay, so this dramatic change in the ranking started from 2021, where Volvo accepted online orders and delivered approximately 65,000 deliveries in December itself of 2021. Apart from this, the growth was driven in terms of increasing demand of the Volvo group, and also the service sector of the business, in the service part of the business also grew.
Okay. And here's another question. It's a challenging one. It's challenging you. Why do you recommend buy when the company's showing decline in production output in major markets of Europe and America? Or is it not?
It is not showing any downturns in terms of the production capacity. However, it is only showing an increase as of now.
Here's a good one. You don't have to answer this, but it's a good one. Are you going to buy the stock now that you've done all this work and you see a 32% upside?
Yeah. If I have
You-
the right amount of money, then I would definitely buy a few shares of the company.
yep. You're supposed to say, I'm a poor young person right now. Let's go to your valuation page, because we've got a question from Patum Sak, who is saying, go all the way down. Yeah. How does the cost of debt and WACC compare with other peers? Okay, let's see. So the WACC is, let's say, the cost of debt is 2.6, and after a 25%, 24% tax rate, it's 2, and your WACC is 10.6. Do you have any perspective of how that, do you think that's high? Do you think that's low? What are your thoughts on that?
Okay, so if I were to compare these rates in accordance with the whole sector of the company, these are pretty stable rates, and that is why I've assumed these rates only for the valuation of the company.
Okay. Hold on one second. Uh, so how does it feel to graduate from Valuation Masterclass Bootcamp?
It feels amazing because I really didn't think that I would be able to graduate in week 5. It was so much filled, the week was filled with so much pressure, and I had my college reopening at that time, so I didn't feel like that I would graduate, but here I am.
You made it. You made it. And tell us
Yes.
about the transformation that you went through in the boot camp.
I feel that the major transformation that I was able to experience in myself, that I spent a lot more time reading the company's reports, and not just reports but going through various reports like of McKinsey, of PwC, in order to get a much more broadened perspective rather than sticking to one single perspective. So I was able to read more, and which is something that I've never done previously.
Mm, wonderful. Well, I think you should be very proud of that accomplishment. It is tough to get to the end. As you know, many people don't make it, and you've made it. So I think your presentation was excellent, and it's just the beginning. Imagine you could cover Volvo for the next 10 years and still not know everything about it. So that's the exciting thing about being an analyst.
Yeah.
Well, all right. Any parting words from you?
I would like to express my gratitude to you first of all, to
Mm,
Moment for always having all of our backs and responding to messages, and to all my peers. We had a meeting yesterday in order to discuss how the presentation looks. So I would like to express my gratitude towards everybody. Moreover, I saw a change in myself, and to be honest, I'm a person who wants to pursue my MBA in finance. So this was something that I really looked forward to, and I'm very happy with my transformation.
yeah, you should be very proud. So congratulations. And now you can relax. So
Finally.
yes, exactly. All right. Well done. And I will see you later. Take care.
Okay. You too, Mo. You
Yep.
too, Andrew.
Yep. Bye. Well, that was awesome. And it gave a little breakdown of Volvo trucks and something I don't know much about. And I'm learning. So let's keep learning. We've got more coming, ladies and gentlemen. And of course, if you want to build a competitive advantage in company valuation, consider joining the Valuation Masterclass